I'm going to be talking through Roth conversions, just talking through what is a Roth conversion, when does it make sense to do one, is it a good idea, what should I be considering? And I'll start with the basics, which is explaining the difference between a traditional IRA and a Roth IRA. So with the traditional IRA, it's money, if you make a contribution, it's money that you're not paying tax on today. So there's an immediate tax benefit to making a traditional IRA contribution. The account grows tax deferred. And then when you take a distribution from a traditional IRA, that's when you pay tax on it. So there's no tax owed now, grows tax deferred, and then tax is owed later whenever you take a distribution. With the Roth IRA, it's totally opposite. So if you make a Roth IRA contribution today, there's no immediate tax benefit to doing that. The account still grows tax deferred. And then when you take a distribution from a Roth IRA, there's no tax due. So you can think of a traditional IRA and a Roth IRA as two separate silos. Even though they're both geared towards retirement, they're both great ways to accumulate for retirement, both grow tax deferred. Because of the difference in the tax benefits associated with them, they do have to stay as two entirely separate accounts. And because the traditional IRAs were introduced in the 70s, where the Roth IRAs weren't introduced until the late 90s and didn't really become a part of 401k plans until closer to 2010, most retirees today spent their careers accumulating into traditional IRAs. So now their question today is, should we be doing Roth conversions, which is basically taking money from the traditional silo and pouring it into the Roth silo. Continues to grow tax deferred, but then when you take distributions from a Roth IRA, it's tax-free. But remember to take distributions from a traditional IRA, because it's never been taxed, there would be tax due on doing the conversion. And the way our tax system works is it's tiered. So if we can do a Roth conversion in these two lower tax brackets, that would be the ultimate goal. That would be amazing. But then we just want to be mindful that if you're married filing jointly and your taxable income exceeds $90-ish thousand, you would then jump from the 12% tax bracket to the 22% tax bracket. And we have people asking if they should convert their whole IRA from traditional to Roth IRA. And in some circumstances, that would throw them into the 37% tax bracket. So we just want to be mindful of, it's great that the Roth IRAs are then never taxed when you take a distribution. But if that means jumping you from the 12% to the 32% bracket now, does that make sense? So taxes are a big part of the conversation when doing Roth conversions, but there are some other things to consider. One of them being Social Security, which the way Social Security works is if you're a recipient of Social Security, the amount of tax that the taxation of Social Security is dictated by the amount of other income sources. So outside of Social Security, depending on how great your income is, dictates how much of your Social Security benefit is taxed. So in some circumstances, Social Security might be the only income source. And if that is the case, actually none of your Social Security is taxed from a federal level. And again, the greater that other income is, the more your Social Security benefit is taxed, and it can be taxed up to 85%. So that's something to consider when making Roth conversions. Is it going to make your Social Security more taxable? Because again, to do a conversion, it creates more taxable income. Temporarily, it decreases your net worth because you're basically volunteering to pay tax on it now to allow tax-free distributions later. So simple math, if you do a $100,000 of Roth conversion, you might owe $20,000, depending on your tax bracket. But you would be volunteering to remove that $20,000 from your net worth because that's the tax is owed. So then your net worth is decreased temporarily. And then depending on growth over time, it could take a little bit of time for your net worth to reach break even. And then it can continue to grow from there. But depending on the amount of the conversion, it could really significantly decrease your net worth temporarily. So that's something to consider, to be comfortable with, kind of understanding that. And then the next thing is IRMA, which that's an acronym. It's Income Related Monthly Adjusted Amount. And that's an acronym that is associated with Medicare. So with Medicare, not a lot of people realize that that's also income sensitive. So the higher your income is, the more you might end up paying in Medicare. And the way Medicare works is there's certain thresholds that if your income exceeds it even by $1 for that year, then your Medicare Part B and your Part D, you could end up paying a surcharge for. So that's a big thing with Medicare recipients is, does it make sense to do a Roth conversion if then a couple of years later, you're going to be paying more for Medicare? So there's definitely a lot of things to factor with Roth conversions. Sometimes it makes total sense. It's a no-brainer. Let's do them. In other circumstances, depending on taxation, healthcare, Social Security, maybe it just doesn't make sense.